Hey, I'm Jim Frias, content creator of personal finance website IQ Sense. I want to make saving and investing more digestible, but overall, I want to improve your personal finance IQ over a cup of coffee. So if you haven't already, brew yourself a nice cup of coffee and I'll go ahead and jump right into it. Hey, hopefully you're enjoying that cup of coffee. Today we're going to talk about the most talked about thing of 2021. Everyone's talking about it, and it's hard not to recognize digital currencies and Bitcoin for 2021, and just how it's had a massive run, unheard of in historical terms, and many financial experts are still reluctant to accept it as a new viable investment per se. It's more still thought about as speculation, just due to the fact that you can't other than you trading it and waiting for the price to go higher and then selling it for a profit. You can't do much with digital currencies at the moment. So there's no usage or utility, as some would say. Bitcoin is just one of X amount. I don't know, maybe there's 20, 14, and then there's the popular ones ultimately, and then you have this new one people joke about is the Doge, the Doggy Coin, all these meme type of digital currencies that have just taken off, and as they say, to the moon, to the moon, to the moon. But let's really talk about this from a personal finance perspective and kind of understand some underlining themes before you decide to invest in Bitcoin or buy Bitcoin or speculate on Bitcoin, whatever it is. I think there are a few things that you want to consider before you make an investment into Bitcoin. Three things that we're talking about. Three. The American three. I'm so used to three. Same thing. Three things to consider before investing into Bitcoin. So I'll dive right into it quickly and just touch on a few. The first one is understanding your risk tolerance. It's very important in achieving your financial goals. Is how are you going to get there? What kind of investment instruments are you going to use? And what can you manage? And meaning your emotions when you see that market. Let's just take the most recent 30% decline. Month of April, Bitcoin hit an all-time high, I believe, of roughly $62,000 a Bitcoin. Now, in a matter to fluctuate enormously, just look at the price that we mentioned. $62,000 is where it hit an all-time high, but since then we're roughly trading between 35 to 38 range. This is as of June 1st of 2021. Of what drove that price? Well, there were various factors. Tesla, announcing in February that it was going to accept Bitcoin for a purchase, drove up the price. Secondly, you had other reports of these financial professionals or financial institutions that were reluctant or a bit on the hater side of digital currencies and Bitcoin, and saying that there was basically, it's a scam. And now you see them making major investments early on in 2021 and late 2020. They made investments into the cryptocurrency space, some purchasing Bitcoins, some offering different financial products that were tied to Bitcoin investment. So overall, you're seeing this wider adoption of digital currencies. Now, in a matter of less than a month, I believe Tesla, due to its environmental concerns, went back on. I think they momentarily paused accepting Bitcoin because it takes so much energy to mine Bitcoins the way the technology is used, or the blockchain technology. But that's a whole different story. Here, it's really about the three factors that you need to understand or consider before making your investment into Bitcoin. And again, understanding your risk tolerance. So, in your traditional sense of form, you have, sometimes they refer to as a pyramid, and what you see is like, okay, here you have your savings accounts, your CDs, everything that has some type of stable value to it. Then the next jump is maybe US treasuries, bonds, government US bonds. Typically they're pretty stable, but they don't pay too much. And then you go into your other types of bonds that you have within there, corporate bonds, and then you have your high yield bonds and companies that like, hey, it's tied to mining, gas exploration, the new tech company that is losing money, but they need money to grow, and ultimately you're making the investment for the long run, and the risk reward for that is they'll pay you a higher interest ultimately. So then as you go higher up, you got your stocks. Then above stocks, you have real estate and alternative investments, and then the tip of the iceberg of all, now can be considered Bitcoin and digital currency. So understand that there is significant risk in purchasing, and ultimately, hopefully, you're buying and holding, not necessarily trying to time the market or play with the what everyone is talking about is trading cryptocurrencies, which ultimately, in personal finance, if your goal is to reach your financial goals, trading is ultimately, you're going to hit it great 1 day, 2 days, but the probability of you consistently having a profit off your trades, if you're not doing it full-time professionally with a major capital, most likely or not, you are going to lose more than what you're going to gain. Hopefully you break even, but holding it in your portfolio brings up the second consideration. Number two, or the second one, as I mentioned, what role will Bitcoin play in your investment portfolio? Hopefully you have thought about this, and whether you're 100% all equities, within your equities you're diversified in different sectors, and you have different companies, whether you have 10 holdings, 20 holdings, or you are invested in hybrid model of including mutual funds. That includes index funds. Whether you're using actively managed funds or index funds, they're all mutual funds. They act under the same SEC rules. They're sold the same way, and that also includes ETFs. The real main difference between that is that ETFs, you can trade them like stocks throughout the trading day, as opposed to you have to wait to the end of the day for it to get priced, their NAV or their net asset value. So however you're using whatever investment vehicles you're using, the makeup of it, hopefully you're using well-diversified funds that have 100 holdings. So you're ultimately, if one day company A takes a dive but company Z is skyrocketing, that balance off where you don't have so much price fluctuation day to day. Ultimately, the more risk, the more reward. And if you want to sleep at night, or you're constantly looking at your portfolio, what's going to cushion your overall holdings during that time? So typically, let's just say you're going to use Bitcoin as some type of that has a negative correlation to the equity market. That's not so. Just because in March 2020, Bitcoin was heading up while the stock market was going down does not mean that Bitcoin is an alternative to provide you some type of stability or stable value during those times. If you look at it traditionally, it's only been bonds, or I should specifically say US Treasuries. Sometimes gold has played. Now in March of 2020, that's an anomaly where there was a lot of uncertainty. We just did not know what was going to happen, where gold didn't increase as it has in the past. There wasn't a flight to cash, but there was a movement of capital between risky assets going into more risky assets like digital currencies, where traditionally you would see them going to fixed income such as US Treasury or government bonds spread across different maturities. Bonds are the only thing that really provide or have provided that negative correlation, if that's what's in. So if you take performance of that year, you may have been down. If you were 100% equities, you were down close to 40%. But if you had bonds, if you had a 60-40 split between stocks and bonds, and you were invested in well-diversified bond funds, not high risky ones that are tied to yield only, your paper loss would have been about 20%. So understanding bonds, how they work, is an important element. But in this conversation, understanding the three concerns before making that, or considerations before making your Bitcoin investment, it's fine if you have a speculation side, and that's how you make money. That's how you have excess returns, is taking a little bit more risk. But having that be between 1 to 5% of your overall portfolio holdings is very important. And that brings us to consideration number 3. 3 again. How about trying to experiment with a small amount? If we're going to keep that allocation between 1 to 5% of your portfolio, give it a try and use it more as an experiment for yourself. Try it yourself and try to gauge really, hey, these little questionnaires that I got off the internet or my financial professional provided me, asked me to try to understand my risk tolerance. Bitcoin and digital currencies have major fluctuations, as I mentioned again. April 2021, or just less than 2 months ago, 62,000. Now we're at 35,000, between 35,000 and 38,000. And that is major drops within a small time frame. So how do you handle that? So by starting off small, you can really gauge to see, hey, understand your psychology, your emotions, because it's one thing to say buy and hold, long-term investing, but sometimes that goes out the window and you're down 40%. What do you do? Should I sell? Because ultimately we're not trying to sell, we're holding, because we have to understand in personal finance, this is all about personal finance and increasing your IQ, understanding how these instruments are going to help you reach your overall financial goals. And your financial goals may be to retire early, saving for a down payment, saving for your child's education, maybe just building your rainy day fund because you don't want to keep it in, just stagnant per se. I don't know, for traveling, whatever your financial goals are, you got to understand how these investment vehicles all are guiding towards or about reaching your financial goals. So starting off small, experimenting with it, seeing how you handle that. So let's just say, hey, you know what? I'm gonna invest $1,000, or I'm gonna invest $10,000 in Bitcoin. Try the dollar cost average. See how a major drop in price. How'd you handle that? Did you want to buy more, or did you want to get out? What's worked in the past, ultimately, this is just, this is not investment advice. I'm not an investment advisor, nor am I licensed to provide, but historically speaking, what you've seen is people who bought the bottom, ultimately the ones that benefit. Now, Bitcoin being so new, was it 20,000 or 2017 when Bitcoin hit an all-time high of 20,000 or just above 20,000, and then it ended the year at 3,000. And we had all these talks about like, oh yeah, Bitcoin's done, it's gone. No one's gonna. Yeah, it's not gonna work. Well, did you double down? Some people did, and look at them now. Maybe holding on to them, and they don't mind these major market gyrations or fluctuations, and they're able to buy. I'm just buying more. Well, yeah. Have an overall understand that the role that Bitcoin's going to play is it should be considered speculative money. It's too early to tell how Bitcoin will play in the future and what regulation will it happen. Will it replace the US dollar? Will it replace the euro, just to name a few currencies? It's hard to tell. We've heard that the US government and they're all exploring their own digital currencies. So we may have a digital dollar that, there's no need for Bitcoin. And some people think that Bitcoin will replace safe haven assets such as the US dollar or treasuries or gold in this case, because it provides some type of stable value, which it doesn't, because ultimately Bitcoin, its history, there's no price stability in it, and it's been, so you can't even see my finger because there's no chart to really capture the movement that Bitcoin has done just 2021 alone. Yeah. So those are like the three major ways or three things you want to consider. Now, there's another thing that you may want to consider as well is there's indirect ways of investing in Bitcoin. Companies like Square and PayPal a few years ago have adopted digital currencies, and they've revolutionized the whole financial industry of how payments are made, how easily and efficient. They have just really made it much more easier to transfer money with minimal cost, and ultimately have innovated. But they're accepting their users to buy, sell Bitcoin, and I believe a few other digital currencies on Square. PayPal, I believe, only allows you to buy and hold digital currencies. But then you also have this new company that just came out, which is the major cryptocurrency exchange. It's Coinbase. Now, Coinbase has dropped drastically, but Coinbase business model is not tied to the price of digital currencies. It's tied to basically a traditional way of making money, which is tied to revenue and profit. Basically, they make money off by transaction fees, trading fees, storage fees, providing market insights through their different type of tier trading platforms. So ultimately, these are other ways of getting into the digital currencies, cryptocurrencies, or even just how to get into the Bitcoin space would be going through indirect investments through these companies. The biggest factor apart from government regulation of Bitcoin is just finding the utility. Right now, it's in our mainstream conversations, and it will continue to be in the mainstream conversations around Bitcoin. Of it, will it replace paper currency? I don't know. Will it be the new euro? Will it be the new US dollar? That is too hard to tell, and I really doubt that it will remain decentralized. The major market players wouldn't have that interest. And what you're seeing as well, there's some downsides to digital currencies. Apart from the innovation of the blockchain, we still don't have proper storage or just easy ways to store your Bitcoins. Think about it. This is just kind of to build your framework to analyze and whether or not or how you should invest in Bitcoin and other digital currencies. Again, this is Jim Frias. Hopefully heightening your financial IQ over a cup of coffee. It's difficult not to discuss Bitcoin and not acknowledging it in personal finance, because at the end of the day, we're trying to figure out different ways or different investment products that can help us reach our financial goals. Because our financial goals is not like I'm going to be the Bitcoin expert or Bitcoin is going to, no. Hopefully, you got the framework, and until next time, enjoy. And if you have any questions, please feel free to comment down, hit the like button if you think, and if anything I can improve, please send the feedback. I appreciate it. Jim Frias with IQ Sense.